Hey, how's it going everyone? Welcome back to the channel. So I decided I wanted to do a bit of a Q&A type style video based around Alibaba stock because so many people have been asking questions regarding this company in particular. Is it too risky to buy the stock? What about the Chinese government? What about the regulations? What about the delistings, the fines that it's had? There's a lot that we need to talk about. So I'm going to answer some of the most popular questions that I get asked on Alibaba stock. Now, we all know that the Chinese government has been making quite a lot of moves when it comes to Chinese companies, and in particular, Alibaba. They got hit with that massive $2.8 billion fine for anti-monopoly violations, which some argue was more than fair because they did have some monopoly-type anti-competitive practices going on, which wasn't exactly fair when it comes to competition. Then Alibaba, they had their Ant Group IPO suspended, which funnily enough occurred right after Jack Ma made negative comments publicly snubbing China's regulatory banking rules. So, you criticize the Chinese government, you get hit hard. And it's these types of moves from the Chinese Communist Party which has left a lot of investors, including myself, worried about what they could be capable of doing in the future. Like, are they just going to keep pushing back on Alibaba until it can't grow anymore? So this is a big concern for a lot of investors, and I believe Mohnish Pabrai, the Indian Warren Buffett, we can call him, he's got a good opinion on this. The CCP, Chinese Communist Party, have just given Alibaba a slap on the wrist, a couple of slaps on the wrists, for certain practices and for making certain comments. But are they really going to destroy the whole company altogether? I think that would be silly. Alibaba facilitates so much trade in China and so much trade for China globally. The CCP's incentives are to let Alibaba continue to grow. But yes, the risks of increased regulations from the CCP is still a risk, but perhaps not as much as the 24/7 news that's always in your face. Perhaps it's not as much of a risk as that type of news projects it to be. Overall, if you look at Alibaba and the Chinese government, the government has just given them a telling off. They've just given them those slaps on the wrist. They said, listen, we're the ones in charge. Jack Ma, stop criticizing us. We are the bosses. But to think that the Chinese government is just going to destroy Alibaba's business altogether, I think that's too far, because their incentives are aligned together and they've had a great history of growing China to where it is now. So the increased regulation, yes, it's a risk, maybe not as much of a risk as a lot of people think. So basically, US companies and Chinese companies have different accounting practices. If Alibaba does not meet certain accounting practices, then it risks being delisted off the American exchange. Now let's say that worst comes to worst and it does get delisted, which I don't think is likely. Well, depending on your stockbroker, you either get to exchange them for the Hong Kong shares, they become over-the-counter shares, or you can just sell them. So even if worst comes to worst, I don't see this being a major issue. And if you are so worried about the risks of delisting, well, just get the Hong Kong shares. It's pretty simple to bypass this problem. Let's move on to the next main concern investors have. So if you don't know this, which you should know this, but if you buy Alibaba shares, you don't technically own the company. The reasons is because under Chinese law, they don't allow foreign investors to invest into local companies. So if you own Alibaba stock on a stock exchange, you own a shell company in the Cayman Islands who has a legal agreement with Alibaba for a claim on their profits and the assets of the company. This is what's known as the VIE structure, Variable Interest Entity. Basically, it means you own Alibaba, you own the profits, you own the assets, but technically speaking, you don't. Now, a lot of investors are worried. What if the Chinese government steps in and says, we want to completely cut out this type of system? And this is a good question. It's a fair concern. But in saying that, VIEs have been around for a long time. They've been around for over 20 years, and the Chinese government hasn't done anything about it. They haven't done anything looking to stop it. So if you look at the precedent of the VIE structure, it hasn't seemed to affect any investors yet. Nevertheless, obviously you would rather own the company outright than just having this structure set up. But that is just the way that Chinese stocks are set up, and if you want to own Chinese companies, this is what you have to deal with. So those are arguably the three main concerns with Alibaba: the Chinese government, the delisting risk, and the VIE structure. As an investor, you need to know the whole picture of the stock before making any sort of investment. So you look at all of these risks, you look at the news, and this news is everywhere. This has resulted in the stock price getting destroyed. It's gone down by about half of what it was just a year ago. But a year ago, these same risks were still at play. It just wasn't in the news as much. And the market sentiment back then was around Alibaba's great growth potential. Now that the switch has been reversed and the stock has been hit hard, a lot of investors are selling. The ones that aren't are the well-known value type investors like Charlie Munger, Monish Pabrai, Guy Spear, Ray Dalio, etc., etc. Instead of selling, these contrarian value investors are buying big into particular Alibaba stock. And I think that people are sleeping on the fact that these well-known, and at least in my opinion, trustworthy value investors are buying Baba. Munger, Charlie Munger, he hardly ever buys stocks, but he's buying into Baba. He's weighed up the risks, which we've talked about. He's weighed up the potential rewards as well. And the decision that he came to was to buy big while the stock is down. And I'm not saying that we should or shouldn't do the same as Munger and these type of investors. I'm just saying it's interesting to note down. So, as an investor, once we've seen the whole picture, we've seen the risks, but we've seen the upside potential as well, then it's time to make a decision. The decision that I came to was, yes, I want to own Alibaba stock. The decision that Charlie Munger came to was the same thing. Same with Ray Dalio. However, I want to point out the other side to the story. Investors like Warren Buffett, they stay away from Chinese stocks pretty much all of the time. Warren Buffett, he hasn't bought Alibaba stock. So you've got different sides to the story, and it's up to you to weigh up the decision, weigh up the risks and the rewards if you want to invest in Alibaba stock as well. So some people haven't. I've seen that in the comments section below, and some people, they just think it's too risky, and that's fine. And I'm very interested to see how this plays out in 3, 5, 10 years time. I don't care what happens over the short term. All I care about is the long term.